Everybody, Marty Mazzora. Good evening, 18th of January, 2017. This will be your weekly video. Going to jump right into the charts tonight and talk about past presidential inaugurations. Some analysts are predicting some short-term gloom after the inauguration, kind of a sell the news event. We will see. So I thought maybe we'd go back a few years and all the way back to President Nixon. And we're going to start looking at January 1 up to the inauguration and just see what the short-term market indicators said about what we should have expected. Now the yellow line is the 30-day moving average of the S&P 500, the orange line is the 40, the green line is the 50, the white line is the index itself. When the slower moving averages are on top, that's a bearish signal, so the market was signaling not so good things going forward on January 20th, 1969. How did 1969 look? Sure enough, it did say something about the year, and we ended the year down notably. While there were some bright spots and the moving averages got bullish for a time, for the most part, it was a rough year. His second term, which began, or at least the leading up to the inauguration, his second one, January 1 of 73 through January 20th. You can see it was a better looking setup for sure, although we were kind of flattening out a little bit. Market was coming off a bit. Sure enough, the market indeed did continue, and then it rolled over, and 73 was a rough time. And as you know, the president was going through a rough time, and we had the Arab oil embargo, so it was a tough time to be in stocks in 73 and 74. Of course, he had to give up his job, so we got Gerald R. Ford inaugurated on August 9th, 1974. So I went back 3 weeks before that. And here was the setup, a very bearish looking setup, the 50 on top of the 40 and the 30 in terms of the moving averages. Market was struggling. Sure enough, for most of the rest of the year, a very big kind of a washout to that bear market. Market caught a little bit of steam late in the year, and then we ended up coming out of it quite nicely in 1975. Then Jimmy Carter took over in 1977. So January 1 up to Inauguration Day. As you can see, the moving averages were in the right places, but indeed they were starting to slope down. This is a very potentially bearish look, and sure enough, that turned out to be something indicative of how the year was going to turn out. And then Ronald Reagan took over. So the beginning of Reagan's first term, January 1 up to Inauguration Day, averages were in the right places, but again, kind of a bearish look. You got to wonder if the market isn't about to roll over. Sure enough, it was. 1981, rough year for the market for President Reagan in his first term. How about his second term? Now that's a very bullish look. You can see we come up. The slope was decidedly turning up. The market was up. These are in the right places. And sure enough, 1985 was a very good year for the market, and it ended very strong as well. Then we got George H.W. Bush. He took over at that point at the end of 88 or in 1989. His inauguration, the 3 weeks leading up to it, setup looks very, very good. These are sloping in the right direction. What did it say about the year? It said good things about the year. In fact, very, very good year. In 1989, Bill Clinton took over in 1993, so the first 20 days leading up to his inauguration, you can see the setup was pretty good in terms of the moving averages. Market happened to be struggling right about then. This slope is okay, maybe beginning to roll over just a little bit, but caught steam again, had a very good year in 1993. How about his second term, 1997? Very bullish look. Markets moving in the right direction. Moving averages are in the right places. A nice upward slope to them. That says good things about the market going forward. And sure enough, 1997 was a very good year. Then George W. Bush took over. Very rough setup in early 2001. These are in the wrong spots if you're a bull. Looks like the market's trying to come out of it a bit, but this would be a bearish setup. And sure enough, 2001 was a very rough year for the market overall. How about a second term, 2005? Better looking setup certainly in terms of the moving averages being in the right place for the bulls, but the market had traded down below. Did the market recover and catch steam? It did. You can see it got kind of scary down in here. Very volatile year, but 2005 turned out to be a pretty good year for the market overall. Then Barack Obama took over in 2009. The 20 days leading up to his inauguration were very bearish. We had been in a very rough market. These are sloping in the wrong direction for the bulls, right direction for the bears. So you should expect that to continue to see the market lower, and it did. We had that big washout. Market bottomed on March 9th, 2009. Right around mid-April, the moving averages confirmed, and then we were off to the races. Very good year in 2009. And then his second term, 2013, very bullish look in just about every dimension, and we had a very good year in 2013. It didn't come without volatility. There were a lot of dips, but certainly they were all volatility to either be bought or to be ignored. So here we are, folks, with President-elect Donald J. Trump about to take over, and the moving averages are in the right place, certainly sloping in the right direction. So we ask ourselves now, if history is going to be any guide for us at all, does this setup look more like this setup, which led to this, maybe this setup, which led to this, or does it look like this setup that led to this, or this setup that led to this? Certainly it would be the former two setups, but again, as you notice, if you went back through all of these, if you want to replay it, the good setups didn't always mean a good year, and the bad setups didn't always mean a bad year. These are short-term indicators. We don't trade on these at all here at Private Wealth Advisors, but we do watch them. It does help us articulate to clients what we see going on in the near term, and we should always keep our long-term perspective, and I'll continue to come back and remind you of that often. Look in a few days for my weekend message, and I'll talk to you again very soon. Thanks.